You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options House, a powerful, easy-to-use, and intuitive online trading platform that's not only fast and reliable, but comes with dedicated customer service and a great trading experience. Trade on the platform that's top-rated by Barron's and Stockbrokers.com. With completely transparent, value-oriented pricing, Options House is your all-in-one solution for options, futures, and stock trading. Plus, open and fund a new account at optionshouse.com/insider today and trade commission-free for 60 days. Options House is a member of FINRA, SIPC, and NFA. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for the option block. Everyone's favorite bi-weekly source for all things options related. Got a little bit of echo going on in the studio here, but that's all taken care of now. A little bit of education, a little bit of analysis, a little bit of unusual activity, some going on to the old dark side of the options market, and of course, a lot of your questions. Mix it all together, and you have the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few programs for you guys to choose from, including over 500 now, 500 archived episodes of this here fine program. Where can you find all that options goodness? Well, the easiest place, of course, the website, theoptionsinsider.com. Click on the call out on the right-hand side there, or the player on the homepage, or even the radio network tab, the top left corner of the page. Easy ways to get right at it, and you can pretty much listen till your heart's content. That's over 500 hours of content in just this show alone, let alone the 14 others on the old network. Then you're talking thousands, probably tens of thousands of hours of shows we've done over the nearly decade that this network has been running. Of course, you can always find it iTunes, TuneIn, Stitcher, or also via their app stores, available for iOS, Android, and the Fire OS. All right, and joining me on the... Oh, by the way, you can join us every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. We'd love to see you guys in there. Of course, if you can't make it, you can join us after the fact to download and subscribe. Hey, we know you guys like that, too. We love you all, no matter how you choose to join us. If you join us live, though, you get to send questions and comments, which is always fun. And, of course, however you listen, make sure you hit those up with those questions, those comments. You really are the reason that we do this show. All right, and kicking things off, let's see if the internet in Maine is smiling upon him once again. He is the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, welcome back to the program, sir.
No.
Oh, you are there.
You know what it was? It was karma. Because I just criticized you on the IM.
There you go. See?
His phone went off.
You got your comeuppance.
So I'm sitting there blind as a bat going, unmute.
I don't need to take umbrage. Skype does it for me.
It crushed me.
The internet does it for me, which I like. Nice having the internet have your back. It's always a nice thing. And also joining us a little bit closer to home is Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. To you as well, sir.
Always happy to be here, especially when it looks like I might be doing pretty well in the poll that we had on the VIX last week.
Yeah, you and the listeners all crushed it. All of you, the majority. Let me get the final numbers for you guys, but the majority out there were picking a spike over 18%. I think just a little over a third, like maybe 35, 38% picked a spike. And that indeed does appear to be close to where we're heading. We'll get to that in a little bit. But first, let's get a little bit closer to home. In fact, right next to me here in the studio to welcome on our guest co-host today, he is Steve Clausen, the Chief Investment Strategist over there at Options House. Steve, welcome back to the program to you as well.
Thanks for having me once again, Mark. It's been great to be here, and happy Halloween to everyone.
Yeah, Spooktacular. We should put a little more spooky decorations. We got a few up here in the studio. I need to put a few more to give it that true Halloween Spooktacular feeling. We got a little treat for you guys today as well, listeners. We have some other listeners out there who are apparently rockers, and they sent in some music. They asked if we could play it on the old show. The band is called Asbury Motors, and the guy who sent it into Scott Simpson, I believe he might be their lead guitarist. I don't know. Maybe he's their frontman. I don't know. We'll see. But either way, we'll switch up our usual transition music for our Halloween Spooktacular here with a little bit of Asbury Motors. I think the first track we're going to sample here is called, what is it called? Oh, Drive All Night. That was Asbury Motors. And we are indeed heading into the trading block. Of course, a portion of the show where you guys, actually not you guys, we on the old panel break down what was lighting it up today. I was distracted by all of our crazy chat going on over here behind the scenes. And of course, as Uncle Mike was alluded to, an interesting day, kind of a mixed day out there on the broad street, unless you're looking from a VIX perspective, which was a rally ho mode yet again today, up over a point, closing in the 17 and a quarter or so range up there again today. So everyone who voted on our question of the week last week, were leaning in the spike camp. Well, you're looking pretty good. The spike was over 18, so you got about 3/4 of a point to go at this point, and you'll be firmly in the driver's seat there. The rest of the major indices are pretty much unched on the day, so not a lot lighting it up over there from a net end of day perspective. Of course, we had a little bit of a blip, a little bit of a bump going on Friday as well. Right as we were recording Vol Views, the news broke about the reopening of the Hillary Clinton investigation. We saw a lot of markets go crazy. VIX starting to spike just on that news alone. We saw the market selling off and rallying a bit again. So it has been an interesting weekend to digest a lot of news out here on the old street, and probably something, given our luck, will break again during the show as well. So stay tuned for that, listeners. Now, Steve, the last time you were on, you were talking all about the volatility constellation over there in Options House. So now that we got some movement out there in the volatility space again, how is that volatility constellation shaping up, and what else was lighting it up over there at Options House today?
Yeah, the constellation actually is shining on us today. The bump, the election bump, has become more pronounced, as you might expect it may. This week on the 4th, the first Friday of every month typically is a pretty volatile day, just because we have this non-farm payroll, the big trader number of the month every first Friday. And that's nothing relative to the election bump that we see. The constellation in the SPY shows about just under a 13% volatility for this Friday. And for the Wednesday following the election, we have Wednesday expirations now in the SPY. That bump of the implied volatility, the constellation's up above 18, almost 18 and a half. So that's become even more pronounced. People are really focusing in on the election options themselves and trying to, obviously the demand, what an increase in implied volatility really tells you is there's demand for those options. There are not necessarily more buyers than sellers, because every time there's a trade, a buyer meets a seller. But the prices that sellers are demanding to sell the options immediately following expiration are quite a bit higher than the options in the terms around it. So I mean, the focus is really on that election, and I think the end of the week surprise, if you will, of the FBI reopening their case really shows that there's some potential surprises.
We have a long history of October surprises in our election cycle, and apparently we had our yet again this year, or this cycle, with the FBI choosing to throw their hat into the ring this time and deciding things weren't quite tranquil enough with Hillary kind of rolling on into a presumptive victory. They needed to shake it up a little bit, inject a little bit of life back into these markets, at least from a volatility perspective, and they appear to have done so and continue to do so as we head into about a week to go, which is crazy town here to think that the election is that close. It's been so far off for so long, and now here we are in the home stretch. Mr. Rock Lobster, you guys over there in the land of all things pit chat must have been chatting quite a bit today about all things VIX and how it was moving and shaking. And so what was going on? What was lighting it up in the old pit chat? And what else caught your eye in today's activity?
Well, you remember how we were discussing last week that at the money, the 2140 straddle, just growing and growing and growing. The volatility is growing and growing and growing in it. So straddle is pricing $1 or $2 more today than it did last Tuesday. So the volatility, one of my option pit rules is the active option drives the term, and the active term drives the product, and then the realized vol will drive the implied vol, and then it's kind of a circuitous fashion. So with the vol just getting bid, I mean, $49 for the 40 straddle for the election day, that's not small potatoes, really. So what do we got? Vol going up, but the market not moving. So that's just kind of the classic earnings. It's the earnings play scenario. That vol is going to keep going up. It spills down the term structure, or the constellation driving VIX up, probably, without the market really moving. Looks like VIX is going to be up about 25 cents a day, maybe, until the election. That's kind of how it's setting up. And then, already the term structure is totally flat, slightly backwards. So you're not getting a lot more movement out of the futures. Doesn't mean it can't happen, but I mean, we got what I would say is kind of the pop. And now it's in the show me the money stage. Either the Hillary investigation gets worse, it gets better. Something's got to move something to make the vol expand a whole lot more. But VIX as a marker probably, and it's one of the calls I made in our chat room last, is it's going to go up. So, and it's mostly just has to do with the mechanical way volatility works. And that's where that is. We are kind of struggling looking for some trades, but most of it is just, I think the best thing you do is just time spread it. Just buy anything after the, that expires after the 8th, and just sell everything for it. So I think just you sell the crap out of all the options this week and time spread the positions, and you just close it all on Friday and say thank you very much. So that was kind of what we were looking for. We're just trying to find the best way to do it. And that was essentially our pit chat for the day, because it was a lot like watching paint dry, I think.
Slowly increasing paint drying on the wall there. If the VIX was indeed a nice bland yellow or white, maybe a beige paint, that'd be perfect. All right. And last but not least, Uncle Mike, what was lighting it up over there in the paradise on Earth known as St. Charles, Illinois?
Well, nothing really lighting it up specifically. The only thing that I'll just kind of add to some talk on volatility, this is a thought that I've had recently. What if we have another hanging Chad's election like we did in 2000? What would be interesting about the Wednesday theory, or of selling some Wednesday options, is that you could get a lot of implied volatility. You could get a lot of juice for them. But if we don't have a clear winner on Wednesday, then what happens to that? Does the vol just spike up that morning, and then you're in trouble with the options that you sold that are going to be expiring anyway, because the market may move one way? That, I think, would be pretty interesting to see, because we obviously did not have Wednesday options back in 2000. So that's one of the things that is kind of going across my head is looking at how those Wednesday options will react to this. Last Friday, when the news came out midday about how the new email thing with the FBI, with Comey making his announcement, that was definitely a market mover. I'm surprised it did not have more of a market movement, but it did have a pretty significant movement in the VIX. If you look at that, if you look at a chart of the VIX on Friday, you can see that the VIX actually opened the day at the mid-15s. You can see the increase in volatility on later on Friday, and then we had an increase in volatility today. But I think that was definitely a market mover from the standpoint of volatility. What will be interesting to see is that with the way this presidential race is going, I could see another bombshell on one side or the other, and just seeing what's going to happen over the course of these next few days, there could be a lot of tricky things happening with volatility going into the election. And with Trump getting closer to Clinton, I don't see a Trump landslide election. But if Trump does pull something off and pulls this off, then it would not surprise me if we have another hanging Chad's election. So that's what I'm looking at this point. And, we have some other things coming up and around the block, but that's probably the main thing, the election, that is dominating what's going on in the markets right now.
Yeah, it certainly seems to be dominating everyone's mind share these days. VIX and the election, hot talking points. We did a big deep dive into this on our recent episode of the Advisor's Option. I encourage you listeners, if you don't subscribe to that show, check it out. You can get it in our network feed or just subscribe to the Advisor's Option wherever you find this fine program. We did a great breakdown with our friends over there at Swan and others, breaking down kind of historical. Russell Rhodes was also on there as well, kind of talking some of the historical nature of how elections have impacted volatility. The problem with that analysis is kind of twofold. One, VIX data really only goes back to about the early 90s. So your data set, and of course elections, presidential, at least every 4 years. So your data set is relatively limited. And you have a few aberrant outliers in there. You have the 2000, of course, a meltdown of the market. Then, of course, the 2000 hanging Chad election time as well. So a lot of things factoring there. Of course, 2008 also quite the outlier. A lot of things going on aside from the election in that time frame as well that impacted the VIX. So there's not a lot of clear data points on that. That said, it hasn't stopped people from pontificating about what the impact should be, including the Journal, I believe, today, saying that, according to their analysis, that the VIX tends to spike, or peak, I should say, 6 days before the election, 6 trading days, I should point out, not 6 days, 6 trading days, which, of course, would be today. So if you buy that analysis, I don't know, Steve, you're shaking your head. You're not buying that analysis. But if you buy that analysis, then today is going to be the peak, and we're just heading downhill from there. Are you subscribing to that theory, Steve, or you think that's kind of reading into the tea leaves a bit much here?
Past results do not indicate future results.
I didn't realize your compliance guy was on the show with us today. How nice of him to join you.
I think you're right that causality is oftentimes discussed without being statistically relevant. But I do think that like all things surprising to the marketplace, as they sort themselves out, or even more importantly, as the market basically comes to terms with whatever the reality is, the volatility tends to decrease. So anytime the volatility goes too high or too low or too quickly one way or another, it does tend to head back to its mean.
It is indeed mean reverting, and we're going to revert to our next segment, followed after, I should say, by a brief interlude by our friends over there at Asbury Motors. This track is called She Ain't. Nice little musical interlude. Again, Asbury Motors, spell them like you would Asbury Park, ASBURY, and I think they're available all the major outlets. So your iTunes, your Amazon Musics, your Google Plays, your whatnots, fun stuff. As we move on into a nice happy tune to set off the darker side of the show, the darker side of the space, of course, the odd block, the portion of the show where you should see us listeners, all don our fedoras and our trench coats, even though it is a little warm in here in the studio, to dive right on into the shadier side of the options business. Going to kick things off. This is a name we haven't talked about in a little while. This is Metlife Inc., ticker symbol MET, closing today just a tick under $47. This is a name that does about 14,500 contracts a day, doing a fair bit more than that, doing 51,000 and some change, about 4-to-1 calls over puts. That was lighting it up today. Should also give you an indication of what was catching our eye out here in good old MetLife. If you want to find it for yourself, listeners, got to scroll a little bit, got to go past ACK and Dees and Nove, and even all the way out past the weeklies into Jan, and then beyond, because you got one leg in Jan, and they got another leg farther out, all the way out in June. Yes, it was a June 2017, June 29th, though, so put that in your pipe and smoke it there. The June 42 half call spread here going up 10,000 times, 10,600 to be precise. Looks like paper's rolling a bit out, so they're selling out the Jan, buying the June, and doing it again for some size, about 10,600 contracts, doing it 80 cents net to buy the June. This one up on one block over there on the Philly marked spread. We saw these, obviously, these are in the money now, which is kind of interesting in and of itself. Usually when you see something like this, if someone is rolling and they have obviously an in-the-money leg that they're sitting on some money on, which they blasted out just a little bit over parity, that's always a good sign that they're sitting on some house money and they don't mind giving some of that up to get out of that leg. But usually when they reestablish in that sense, they don't come back to the same strike. They usually do the old up and out, which is you roll and then you go out and up a few more strikes. Give yourself a little bit cheaper option to buy on the flip side, and then also B, a little bit more room to run on the upside while still locking in those profits on the meteor leg. Our friend here, maybe he didn't get the memo. Maybe he just really likes the 42 half strike. So he's deciding to plant his flag there yet again. Looking here back at about the last year or so in MetLife, it's been a bit of a turbulent year or so. You can kind of call it maybe a bit of a lost year. It was trading right around this time last year, right around 49.50, and here we are a little bit shy of that yet again. So a lot of back and forth, of course, taking it on the chin like most names did back in February, and then rallying and kind of vacillating between about the 35 to about the 47 or so handle here over the past 6 months or so. Our friend here clearly thinking the party is going to continue and maybe choosing an interesting strike to keep that party going. Mr. Rockoffer, what's your thoughts here on this roll and his strike selection, which is odd?
On the Met spread, the 42, I'd say he likes that one.
He just likes the 42 halves. He's not going to change. He doesn't care that it's $6-7 in the money now. It doesn't matter.
I'm just trying to. I try to find the entry price. Maybe he paid $1 for it. I don't know, or $1.50. And he's like, I'll just roll that one, and it's working out for me, and things are good, so I'll just keep it rolling. I'll keep it rolling. I guess. So, I mean, it looks like the guy's made money the way Met's been trading. I thought at first it could be a divvy play. Somebody's trying to skate through a divvy, but it doesn't look like it. It looks like those are not extras. Those are not. They're right on the cusp of being assigned calls because of where the puts are trading. So it's not a divvy exercise play, but I just think somebody wants to stay long Met. And, and if they're right so far, who am I to say that's a poopy trade? I mean, realistically.
We are the ones. It's your job, sir. It's your job to call out poopy trades here on the old show. As my little guy had come on the program here, calling all things poopy. All right, moving on. Yeah, there's nothing ostensibly, incorrect with that approach. It's just a little bit odd, and of course, a little bit more outlay than you probably want to shell out, particularly if you're sitting on all that house money. You don't want to put it back to work on the exact same strike again. It means a lot of intrinsic value you could then lose. But it's interesting nonetheless. I'm trying to think of the last time we saw someone so aggressively staying so in the money on a time spread like that. I can't think of one. So that's definitely maybe a new feather for the old odd block. Moving on to name I don't think we've discussed this name in quite some time, if ever. This is Holly Frontier Corp. Ticker symbol HFC, also closing a tick under about $25. This time moving a little bit to the upside, though, up about nearly 5% or over $1 on the day. It's a name that does about 3,500 contracts a day, doing nearly 7,000 today, about 5.5 to 1 calls over puts. And what we saw out here today was a bit of your old bullish risk reversal with a call kicker, or you call it maybe just a upside vertical financed by puts. Call it what you will, but that's what we saw out here. Is all the way out in Jan. So scroll on down a little bit, listeners, if you want to find it for yourself. It was the Jan 2017, 27.5, 29.5 vertical going up 2,000 times, and against that, 600. Only 600 of the Jan 21 puts going up there. So all pretty much opening on all those strikes. Not a ton of open interest on either of them, or any of them, I should say. Went up in 3 blocks over there on the ARCA marked spread. Didn't see any stock going up with this one. So it appears to be what it looks like on the surface, which is someone wanting a nice cheap way to get long a wee bits of good old HFC, and not being averse to drawing a line on the downside there on the 21 strike. And looking back over the past year or so, that 21 strike is not too terrible. It's pretty much right around the lows, or a little bit below the lows, which were around the 23 or so handle back in July for this name. So back on the 20, actually hit 22.25. So I guess that 22 strike is 21 strike, I should say, a wee bit below even then. So if he does get put on those puts, then he will indeed be buying at least a 52-week low, which is, I'm sure, he's comfortable with. And again, to the upside, this thing really takes off if it starts breaking to the upside. And it has indeed traded higher. It's got to go back a little bit to see it, but it was back this time last year, about November of last year, that it was trading 50 to 50 handle. So this thing could easily be poised to double if it does retrace those levels again. And our friend here clearly betting that it is, and looking to get himself some cheap deltas and financing a little bit with some puts as well. Mr. Rocklopsy, you know I'm a fan here of these bullish risk reversals, and even they do it in these kind of ways as well. But interesting stuff here. What do you think of our friend here? Drawing a line in the sand and also buying some upside here in HFC.
I thought that this looked like an interesting play. But what I find interesting is somebody buys the call spread and sells the put. You know, so it's like you take all the risk for just a little bit of the upside. You know, like, I'm going to really kill it. You know, I got this spread and I'm, you know, I got it for low debit, and, you know, maybe the stock goes up and we make some money on it. It's not a very ambitious upside trade considering he's selling the put, don't you think? You're like, woo, I get to make, you know, and obviously the rate of return on it looks really good, except you have to put out the margin for the stock for a small upside. Doesn't that strike you as strangely crafted?
Yeah, the put leg kind of left me uninspired, shall we say? You know, if you got to do it, go big or go home. Draw a nice line in the sand down there. Really erase a lot of your premium, or again tie up some margin as well, or again do a little more size to the upside. Something like, yeah, you're right. The ratio was a wee bit funky here, but I guess that's all he had. He can go that far and no farther, sir. You couldn't tie up any more capital with this trade. He just wanted a little bit of deltas here in HFC, and he didn't really want to pay a lot for him. And so in that sense, I would say mission accomplished, sir. Well done. As we move on to our final name, our final victim here in good old odd block territory. And this is another name we haven't, I don't think we've discussed his name before on the show. This is Encana Corp, ticker symbol ECA, and we're talking line in the sand puts, maybe talking those again. This is the name that does about 9,000 contracts a day, doing about 31,000 today, 14 to 1 puts over calls. And that should give you some inkling, listeners, of where our friends decided to draw their line. Yes, we saw some pretty aggressive. By the way, thing closing $9.54 off about 46 cents. So it was trading $10 this morning, and then before giving up nearly 5% on the day. But that didn't give our friends out there pause when they wanted to blast away some puts. In particular, it was the Nove 8 puts that they went after with gusto, to the tune of starting off with just a paltry 500, but that 500 soon multiplied like rabbits into about nearly 25,000 total. Paper selling a good chunk at a dime. I don't know if they got all of them off at a dime. They obviously defeated that dime bid pretty quickly, because they went out a nickel at a dime afterwards. So they probably got some of the latter kind at different levels, but still taking as many of those as he could for a dime. Again, 25,000 times. Looking back at the past year for ECA, it kind of tracks the market fairly aggressively. By the way, if you're wondering what this name is, of course, they're our token energy name for the day. They're involved in exploration, development, and production of nat gas and oil. And like a lot of those names, it hit the bottom of its trough there back in the February time frame, well under the strike he's right in now. It hit about $3, hit 3 even back in February, and since then has kind of been on a tear to the upside, like a lot of these names, hitting a high recently over 11, about 11 and a half. So our friend here deciding 8 is where he wanted to draw his line, but interesting for a couple of reasons. A, the size. B, the term. He's not doing these out a little bit. He's really taking all he can in the Nove 8 strike and taking all those dime bids off the table. And at least in the near term, it doesn't seem to be the worst play. It was trading around that level back in early August, right around the 8 handle, or so that's probably the last time it really flirted with those levels. So our friend here betting it's not going to retrace those August levels, at least through Nove expiration. So interesting stuff. And we see a lot of line in the sand puts here, Mr. Rock Lobster. They tend to be a little bit longer term. They're large funds and kind of using these as entry points to the underlying, or just kind of a bit of a set it and forget it type trade on some name. They'll do it out in Jan or something else like that. But our friend here deciding to take all that theta and just ride it all the way home, 25,000 times. So take us home, sir, on these line in the sand puts in ECA.
I'd say somebody drew a big line in the sand. Don't you think? But they did
certainly
it in
more than the 600
massive scattered volume.
Certainly more than 600 we had in our previous name there, HFC.
I think this is it almost feels like one of those strategy letter type trades where they recommend, sell these puts because it's free money. And then everybody sold them. And I wonder if it's right. You know what I mean? So, like Bernie Schaefer puts out, sell these puts, buy these calls or something. That's kind of what these puts feel like. I mean, it doesn't look like an unreasonable sale, but still, it's a long time to wait for a dime, I guess.
Steve, I see you shaking your head over here yet again. Not a fan of blasting out 25,000 puts, or roughly in that ballpark, for a dime, and doing about a month out. That wasn't on your risk profile back when you were on the SIBO?
Selling options at a dime to open, selling put options on oil and gas exploration companies at a dime is not a long-term sort of strategy. I mean, you might get away with it once. You might get away with it a lot. But the one time you don't get away with it, you're pretty much done. And we at Options House are a little more risk adverse than that. But, these options went up in one chunk, right? So this is somebody, they have earnings later this week. So this guy will know on a relatively short order whether he skated with $210,000 or if he's going to be owing some money to the downside.
Yeah, not a lot of mystery in this trade. We don't have to wait 6 months for it to unfold. He's going to know really quickly whether he bid it. I'm sure, Steve, you know all those guys on the floor of the SIBO, too. These are the guys who lurked around there trying to find any of these dime bids, or even back then, teeny bids they could find in these things, and just would blast them out like crazy.
They used to just say, hey, how many teenies are you short? And somebody would say, I'm short a Camaro. And it's like, it was, teenies stayed teeny bid way back in the day. much longer than they do now when you have so many more eyes looking at these prices. In fact, you can see that even the puts below this, they aren't offered less than a dime. So, this is definitely a high risk, kind of immediate return, small return trade. And if he did it at Options House, he'd be able to buy them back at a nickel for no commission.
There you go.
But we're not encouraging people to open selling options at a dime. We're encouraging them to close short options at a dime.
A bit of a flipping of the script on you guys, but if you want to take his $25,000 over to you guys, I'm sure you wouldn't poo-poo it. Interesting stuff as usual in the odd block. Now we're going to keep on rolling, but before we do that, one more interlude here from our friends over there at Asbury Motors. What is this selection called? This is Little One. We're all rocking out here in the studio. You guys can't see it. That's why it's not a video show. All right, moving on to your questions here in the mail block segment. Again, the portion of the show where you guys get to take the reins with your questions, your comments, your insights. Hit us up if you are so inclined. No shortage of ways for you guys to do that. Add options on Twitter if you want to do it for this show. Just use hashtag optionblock, and we'll find it. Or, of course, via Facebook or questions at theoptionsinsider.com or via the mobile apps, all baked in there as well. You guys love hitting us up with all sorts of crazy, crazy fun stuff, which we love to read. Sometimes answer if they're good. All right, moving on to this week's question of the week. By the way, I mentioned last week, Uncle Mike and you guys who all picked VIX spiking over 18 won our poll, and it seems like you may be close to winning in real life as well. So we'll see how that unfolds. But yeah, spiking over 18 was our winner of our question of the week last week. This week, we just posed this right before showtime, like an hour before showtime, not even, and things are already lighting it up. We took a little bit of a different tack this week. We asked you, hey, for a special earnings and election and World Series, all combined into one question of the week. We said at the time, so about an hour or so ago, the Facebook at the Money Straddle was trading right about $7.30. VIX was right around 17.20. So we asked you, which of these four outcomes do you feel is the most likely? So VIX spiking over 20 before the election. Facebook beating their at the money straddle, so outperforming it obviously to the upside or the downside. We don't care which way. Or Donald Trump winning the election, or because we're in Chicago, the Cubs winning the World Series. Steve, we'll start with you. I'm going to turn this screen away so you're not tempted to cheat. What is your vote, and what do you think is winning our somewhat fun poll this week?
So all of the above was not a choice.
No, it's not. It was only 4 choices. That they limit you in Twitter, so we're limited.
We need to have I personally think the VIX might have a shot at getting above 20 before the election, which sort of plays to the Donald Trump winning. So those two are relatively correlated. So I'm going to go with, me personally, I'm going to go with Facebook. Might actually surprise. Not sure which direction, but I think Facebook, 5% move, 5.5% move on earnings this week on Wednesday. I think that might be the most likely. And I got to believe that our dedicated viewers, our dedicated listeners are picking the Cubs to come back as a miracle. That's what I'm guessing our viewers are saying.
I don't know. Our Chicago contingent certainly is. We'll see about the international.
Contingent?
Yeah, there's definitely a few Clevelanders in there, as well as others who maybe don't share the local Cubs. A lot of White Sox fans out there, too, maybe not sharing the Cubs love. So, let's go a little bit farther out. Uncle Mike, what do you think? What is your vote, and what do you think is winning our poll so far?
Well, I got to go with the Cubs. I mean, when you have something like this, I mean, they're who would have thunk that the Cubs are going to be playing in Game 6 of a World Series in November? So they've already defied the odds as it is. I grew up a Cub fan. I have to admit I'm not quite the baseball fan I once was, but I still remember the days back in '87 when the Hawk on Andre Dawson and the team were in first place in May, and they ended up in last place. And I still have a lot of heartbreak from those days. So normally I say not to let emotions skew your decision, but this is one I can't help it, folks. I'm sorry. So go Cubs.
There you go. So you're voting for the Cubs, and you're thinking Cubs is winning our poll as well. Last but not least, Mr. Rock Lobster. Again, you got about 4 days left. It's question of the week, even though it's lightening it up already. It'll be interesting to see how this evolves as the week progresses. But Mr. Rock Lobster, what do you think is winning, and what is your vote?
I think we probably will see. I just 20 just looks like so hard for VIX, but I think we're going to scare it, to be honest. Just looking at how the vol is, just mechanically, I think we get very close to there. But so I'm going to say just VIX going above 20 before the election. But if I couldn't pick that, I'd say Facebook beats their straddle.
I kind of chose that strike on purpose because 18 is obviously that's easy. We could do that tomorrow. 20, you're right. That might be a bridge too far for that one. So I'm going to have to fade that one. I'm going to go with Facebook as well because it's the highest probability of the remaining choices versus Donald Trump and versus the Cubs. Apparently, our listeners, though, not feeling that. They're feeling the VIX. They're saying about 40% or nearly a 39% saying VIX is going to spike above 20 before the election, followed by 30% saying Facebook going to beat the At the Money Straddle, and a relative tie between the Trump winning and the Cubs winning the World Series. Whoever would have thought? Whoever thought I would say that sentence? A tie between Trump winning the presidency and the Cubs winning the World Series. Two very, shall we say, odd lot, low probability type things just about a year ago, if you had said something. And now here we are. That is our new reality here in 2016. Crazy stuff. Again, you guys can vote over there. Follow us at Options on Twitter and cast your vote. You got the rest of the week to do it, but a lot of you guys are flocking in already. So don't let your choice get wiped out. Pick it before people pile in. We got a lot of other good questions here. Non-election, non-Hillary related. This is an interesting one. This comes from Nickel45. He or perhaps she asks, your talk of the P&G and Coty arb had my head spinning. Well, you're not alone. A lot of people were confused by that, Nickel45. He goes on to write, so I did some research and came across terms like put squeeze and gex. And now my head is spinning even more. I included one of the links below for clarification. Is this stuff accurate or just noise? Thanks. He included a link to an article, I believe this is over there on Seeking Alpha, talking about this variable someone concocted called gamma exposure, a.k.a. GEX, G-E-X. And they're trying to essentially quantify as a variable, a function of the market that we've talked about a lot here on this program. You see it's playing out a bunch of different ways. It's usually asked around times like expiration. How much does gamma move the underlying? How much does that gamma effect draw an underlying to a strike and pin it or move it across strikes and things like that? So that's usually the context that this is asked to us. This is a little bit different version of it. And terms like put squeeze, also kind of interesting. But we saw these kind of bandied about a lot. Steve, these are kind of just referring really to a lot of open interest, obviously, in the put wing and those put strikes. This gamma exposure, a new and interesting term. I kind of like it, but a new way to kind of quantify an old thing, which is kind of just showing people piling into put interest. What impact does that have on the underlying? At least that's what the question is here. So what do you have for our friend here, Mr. perhaps Nickel45? Are you a believer in put squeezes and or gamma exposure, or are you thinking it's mostly noise?
No, in fact, in special situations like this Procter & Gamble Coty situation, I mean, there is such a thing as a put squeeze where people want to be long the underlying so that they can tender the long shares, because you actually have to be long the shares. And I'm certainly not an expert in this, but the there are kind of limits to how many puts and or how much stock is available to be offset against those long puts, and so you could potentially, the put price could go higher and higher as you offer these puts and have to sell stock. If the borrow gets hard, then the puts get squeezed and there's less supply of them, so that can affect the price of the puts relative to the underlying. It shouldn't necessarily have an impact on the underlying. And then as far as gamma goes, that we could talk for hours on the impact of options on price, and does large open interest attract price? And there are some actual real life circumstances which cause that to logically be true. If I'm long gamma and the price of the stock is above the strike price I'm long, I am a natural seller, and I'm a seller down to the stock price. The strike price. And if I'm long that same option, be it a put or a call, and the stock falls below that strike price, I am a natural buyer. So as a long side, I'm a natural seller above and a buyer below. What does that do? If it creates supply or demand for the stock below the strike, supply of the stock above the strike, to me, that sounds like my own actions as the long. I am pushing that stock price towards the strike price I'm long. Now, of course, if you're short the option, you're going to have the opposite hedging impact. But a lot of people that are short options don't necessarily feel the need to trade in the stock until the absolute last moment, because they don't want to be buying high and selling low and repeating that over and over again, where long gamma scalpers obviously do want that. But one thing for nickel that I would say is anytime you find your head starting to spin, back away slowly and get your head around something that you understand, and that you will be much more successful doing versus trying to dive into something that makes your head spin.
Yeah, definitely. You want to stay away from that P&G Coty one. It was daunting to pros, let alone to people coming to it from the first time. Speaking of which, we have another question here. So, Mr. Rock Lobster, maybe we can combine a twofer for you. I guess people have this on the brain. I'm not sure why. I think this thing is pretty much wrapped up. But question from this comes from PFC11. He says, "What's up with the PG Coty options ARB? Any updates? I know you guys put out a little white paper on this. This was probably about a month or so ago, or close to it, Mr. Rock Lobster. So first off, maybe your thoughts in general on the first question, which was from Nickel 45, about gamma exposure and put squeezes, the impact they may have or perhaps lack thereof. And then secondarily for our friend here, PFC11, who wants an update on that. I'm sure pretty much most of it has wound down by this point, but if you have an update for our listeners here, have at it, sir.
I would like to have a really good update on this, but everything I believe, is played out at this point. So as far as squeezes go, it's just there's something we do at Option Pit we call there's a mechanical trading. So anytime there's what we'll just call a mechanical trade function, it breaks the option model or the assumptions in the option model, because there's strange things happening with different parts of the model. So normally you assume like strike and timed expiration and all that stuff is normal and functioning in kind of, just the normal fluid way. But when you have a deal where, all of a sudden when you tender something, the option combination gets messed up because you don't know how much stock you're going to get back, and you have option combinations against a stock position, all of a sudden the reversal conversions basically get screwed up, because the delta, all the initial trade deltas are changed because you don't know exactly what's going to happen. And what that does is it puts the reversal, it actually creates gamma in the reversal conversion, meaning your option combinations versus stock. That relationship is not just kind of one-to-one anymore. One contract, one call, one put, and 100 shares of stock. It actually has a delta, and anytime you have a delta, there's some gamma there. So as far as what happened, I haven't looked at it since the initial deal went through. I just know most of the open interest is gone. I believe it went out in October. I saw what the tender was, the tender settle price. I wrote it down somewhere, but to the couple of our clients that traded the deal, they were already in and out and gone. So I wish I had more information about that, to be honest. But normally when you see size calls and puts going up out of the money, it's almost always option combinations, buy, call, sell, put, or something like that. It's normally tied to stock, and that other side will be tied to something else. So that's kind of a tell. It's just when you're looking at P&G, you're like, why is somebody buying, calls that are 30% out of the money? Well, it's because they don't want to have a call assignment mess everything up down the road, which is why they trade them very far out of the money. They don't ever want to have a problem of the short call being assigned to them if they have to exercise the put side of their trade. So that's kind of how all that went down. And I apologize if I would have actually read the show notes earlier, I would have at least figured out what the conversion ratio was at the time, because we were looking for because that's what you would need to kind of figure out how it all went down. So maybe we'll just I'll do a mini segment on that once I figure out what the final deal ratio.
Yeah, maybe a little mini blog, and we could discuss it on a future episode. Clearly, people got it on the brain, so they want to talk P&G and Coty. So we can oblige you, folks. We can oblige you. We got time for one more here on the old show. This is the good one since you're here, Steve, from Barncat. He should have sent it to you guys, but he sent it to us instead. He says, I guess this is for the Options House crew. I'm an E-Trade customer, but I'm thinking about making the switch to your firm. I have been, I should say. I've been thinking about making the switch to your firm for a few months. Will my account automatically switch over to Options House or after the merger, or should I switch it manually now? This is obviously a challenging question, Steve, on a bunch of levels. I know in the past, just watching from the outside, these types of mergers in the brokerage space, platform integration seems to certainly be where the rubber meets the road for a lot of these deals. It's a huge challenge for a lot of them. So I don't know how much insight you can give, what is his name, Barncat here now. But if you have any insight to share with them, have at it, sir.
Yeah, what I would say is one of the benefits of the E-Trade acquisition of Options House is we are going to be providing a trade experience for every trader at whatever level of sophistication, whatever level of options trading that they are at and that they wish to aspire to. One of the things, it is going to take a little bit of time. I mean, it is relatively complex. Options House was not self-clearing. We had a third party clear our trades, and now eventually E-Trade will be clearing our options. So there is a transition that is in effect now that we are going to be migrating to be part of the E-Trade family, the Options House trade experience. But we definitely want to offer that trade experience to all of the E-Trade customers, and that is the long-term goal. Long-term, hopefully, being less than, sometime soon in 2017. But if you just can't wait, you certainly are allowed to open an Options House account. We have several customers who have an Options House account and have an E-Trade account. I mean, each firm brings a lot to the table, and when we get to combine, we're going to be a really powerful force.
Yeah, if you're gung-ho about it, go for it. Never a time like the present. These mergers often take a long time to play out. But good questions, everybody. That's all the time we got for the mail block this week. It's time for us to keep on rolling into our final segment. It's time for Around the Block. Musical interlude brought to you by our friends over there at Asbury Park, that one called Diamonds. So interesting stuff here as we move on into the Around the Block segment, the portion of the show where we tell you what we're breaking down, what we're keeping an eye on for the rest of this week into the weekend. And I have a feeling it's going to be one main thing on everyone's horizon, but there are still we are, of course, still in the middle of earnings season. If you like things a little bit more concrete, you can sink your teeth into quite a few big names coming out this week. We got Facebook on Wednesday. We got good old Starbucks, I believe, on Thursday. Alibaba, Pfizer. We've got Berkshire later on this week. I got an FOMC announcement on Wednesday. I don't think anyone expects much coming out of there. So a lot of things going on. Of course, non-farms, again, as Steve alluded to, I think a lot of those, at least on the macro side, going to be overshadowed by a little thing called the election, which is coming right on his heels early next week. That said, Uncle Mike, what do you keep an eye on for the rest of this week, sir?
Well, besides what you said, I think there's one thing that might be kind of interesting right now, and I'm watching IBB, the biotech. Not necessarily looking to do any serious trades in there, but watching it because of the fact that if Hillary looks like she's getting some more momentum, I can see that coming down a little bit, just because of the Hillary factor, basically. So aside from what you just mentioned, I think those are all the obvious things, and of course the Cubs. Hopefully on our next show, we'll be talking about the world champion Chicago Cubs, but I think the biotechs are going to be, and also as well as pharmaceuticals and individual companies, I should say. I think it's going to be pretty interesting to watch, so keep an eye on that, folks.
Staying on the trading tip in the Cubs really quickly, I heard that after the heartbreaking loss on Saturday, that ticket prices plummeted. I think the average price to go into the stadium, or not to go in, but the average ticket price in the stadium for the earlier games was about $3,600, and then I think last night's game you could walk in for about $700. So it dropped substantially. I guess Cubs fans are a grim lot, and they were blasting away at that bid once they lost that game. That said, Mr. Rock Lobster, aside from the Cubs, what are you watching for the rest of this week, sir?
Again, seeing if the vol keeps ticking up, which I think it will. I don't think it's going to do tons. As I say, that 20 was just a hard hurdle. I think higher is definitely possible. And, what's the latest shenanigans that'll come out tonight? Which could be just about anything, to be honest, when you think about it. So all kinds of excitement in election land. And I think that's overshadowing literally everything. The Facebook earnings, though, if Twitter can actually say they think they're going to start being, gap positive as far as making money, Facebook, which is pretty much become the king of monetization at this point, I'd like to just see that juggernaut continue, because I own some Facebook stock and I want it to go up.
There we go. Honesty. That's what we preach here on the old program. And last but not least, Steve, what are you watching for the rest of this week, sir?
Totally focused on Game 6. Got to win Game 6 before you can win Game 7. And, it's actually, that price fall that you described on Sunday, no Cubs fan wanted to see the Indians parade on Wrigley Field, a world championship.
That's true. It was
right?
just too heartbreaking.
But those guys that stayed with it, that stayed with their trade, that went on Sunday, they saw a great baseball game, and they saw the first Cubs win in Wrigley Field in 70-some years. I forget. Did the Tigers sweep them in 1945? But, the Cubs at night, I'm going to be watching my windows, see if they get soaped. Game 6 on Tuesday, Game 7 on Wednesday. But on Wednesday, I actually am going to pay attention to Janet Yellen and see how strongly her signal for a December rate rise comes across, because most people are saying that's a done deal, but we shall see. And then Facebook earnings is a huge name in the Options House family. A lot of people use the product. They know they trade what they use, always a good idea. So there's a lot of retail interest in Facebook. So I do think that Facebook seems to be hitting on all cylinders. We'll see if they actually deliver on those with their real concrete results.
And I will take it home with our friends from Asbury Motors one last time. I want to thank them for sending in all this fun music for us to enjoy here during the show. Hopefully you guys enjoyed it as well. Check them out, Asbury Motors, ASBURY, wherever you find your favorite programs, or your music, I should say, so iTunes, your Amazons, your Google Plays, your SoundClouds, and what have you. They should be up there. One last time before we sign off here, they go back around the horn. Let's go in the opposite direction this time and see what people have cooking up that may interest you for the week to come. Steve, last time you were on, your volatility constellation was a big hit. I got a feeling one or two people might be checking that out again in the week to come. So give us a hit on how they could find that, as well as what else you guys have cooking over there at Options House.
Yeah, Options House, the platform for active investors. We have, most of our tools are totally integrated into the trade experience. So they don't get in your way. They allow you to trade and execute very quickly and analyze as you see fit. But this week we have 2 strategy sessions being presented on tomorrow night. I'm both for neutral trade strategies, which might be the play from now until the election, and then you might not want to have these trades on afterwards. But calendar spreads on Wednesday, given by our friends at Options Animal, and And tomorrow I'm doing one on iron butterflies and iron condors.
My old favorite, iron butterfly. I had a friend who said, who calls iron condors iron butterflies for cowards, and I've always kind of liked that description. So check them out over there. Check them out over there at optionshouse.com if you want to check out all the blogs and all the other cool stuff that they're offering. You want to kick the tires over there at optionshouse.com/insider. 2 free months. You can't go wrong with that. So our friend who wrote in and who think about switching and everybody else, 2 free months. Go for it. optionshouse.com/insider. You can't beat free. Speaking of free, Mr. Rock Lobster, what do you guys have cooking over there that's free, or maybe perhaps an 8th on a 10 lot?
8th out of 10 lot, our Saturday class on VIX volatility in the ETPs. This Saturday, 9:30, sign up. We've got a huge turnout, our biggest ever. It's amazing our Saturday classes grow every month, maybe because people learn something. So you want to understand how the vol products work, how to hedge your portfolio with them, how to use them, what to expect from them. What the heck is all this VIX crap that Andrew talks about all the time? Come to our webinar. It's 3 hours of learning. You get to keep the webinar, and your head will be full of volatility. Let's put it that way.
There you go. Check it out. Optionpit, I should say, .com to check it out for yourself. And last but certainly not least, Uncle Mike, what is cooking in the land of all things going along and RCM Wealth Advisors?
Well, of course, there's a lot of things going along. Hopefully the Cubs will go long tomorrow night. But nonetheless, if you are interested in buying my book, which happens to be titled Go Long, go to Amazon.com and you can buy the Kindle version of it for less than the cost of, a Starbucks. I got to come up with a good trading thing for that. But anyway, also, if you do have any interest in working with a financial advisor who does not run with fear when he hears the word put option, feel free to contact me at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
That's going to do it for us. On behalf of Uncle Mike and Steve and the Rock Lobster, and indeed myself and our friends over there at Asbury Motors, I want to thank all of you for downloading, streaming, and subscribing. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.